Hello, this is Paul Gibson. Once again, we're here to learn how to read stock charts. We'll focus on when to buy and when to sell. That's the big question. Let's get started. First, we're going to learn how to interpret these stock charts. We'll do this in a couple of different ways. As you may recall from our Basics 2 video that we developed a system for inputting our requirements into our analysis tools on a stock chart in stockcharts.com. This is what we ended up with. If you'd like to go back and review that to learn how to do the setup for this, you're welcome to do that now. But let's proceed forward. As you can see, we have our setup here with a moving average of 200-day moving average, our 50-day moving average in blue, 200-day in red. Our Bollinger Bands show up as green lines right here. Of course, we have our volume down here, our volume indicator. We talked a little bit before about what those mean. We also have included the Relative Strength Index, or RSI, which is this index right here. The MACD, or Moving Average Convergence Divergence, called the MACD, in this chart right here. And the fast stochastic, which is represented by these lines down here. The fast stochastic is kind of interesting. We're really only interested in the black line in this case. I call it the fast line. The fast line gives us the interaction that we're looking for. The red line is called the smoothing line, and it has some representations, but we don't necessarily use that, at least not for our purposes in buying and selling. So as we move into this a little bit more carefully, we're going to change this up a little bit. Here's the settings that we have for the current settings. We want to make sure that we have the daily mark here under period. The rest of these go to default. It should look something like this in our chart attributes. Then for our overlays, we want to change one of these moving averages from 200 to 13. We're not necessarily concerned about the long-term view at this point. We can see that if we want to. We can change this back and forth as many times as we want. We can change these moving averages to be any number that we want. The lower the number, the greater the sensitivity to potential change or recent changes. Then, of course, we can do that by clicking on this box right here and editing that number to reflect 13, which is a very common number used by most technical analysts in the stock market. Then we click the Update button, and that changes our chart to look something like this. Once again, we have the moving average of 50-day in blue. Now the moving average of 13 days is in red, so we can see this red line. The Bollinger Bands are still represented in green. The interesting thing about the Bollinger Bands is it takes into account 20 days of history and gives us a 2 standard deviation from the mean representation on that 20-day history. That 20-day history is represented by this dotted green line. So we actually have 3 moving averages or simple moving average lines on this chart. The 13-day in red, the 20-day in dotted green, and the 50-day in solid red line. So when we're looking for a stock purchase, there's a couple things we want to look for. One of the things we can look for, and there are several that we want to work in combination with each other. There's not just one aspect that we look at to help us make a decision. We look at several. It's like going to the doctor. The doctor takes our temperature, looks at our tonsils, checks our heartbeat, checks our respiration, maybe take a blood test before he even tries to do a diagnosis. So we're going to do something very similar here. We're going to look at several different aspects of this chart to make sure that we're getting a very clear picture of what the potential may be for a future stock price movement. So when the 13-day moving average, which in this case is our red line, when it's below the 20-day moving average, you can see that we're in a bearish function. In other words, the stock prices are going down. Where that crosses over, we see that we go from bearish to bullish. In other words, the stock prices start to move up. So this is a confirming indicator, which means that the stock prices have already started to move up. In this case, the change came 4 days before the crossover. So the stock price bottomed out on this day. Then we have the next following day where the stock prices started to go up. The following day after that, we have a red line, which means a little bit of a bearish day, but the candle is very, very small. Very, very small. The following day, we have another bullish day. Stock prices go up significantly. And on that 5th day, we have a very small candle, but still a bullish candle. As you can see, it's a white candle, reflecting back to our presentation in Basics 1. We get the crossover of the red line crossing over the dotted green line. That's an indication of trend change. We're doing what's called trend analysis. We're interested in trending. If we can follow the trend, we can be very successful. The next thing we might look for, once again, this is a vote to buy, is that crossover. Looking for the crossover of the 13-day moving average when it crosses going from above to below the 20-day moving average, which occurred about here. This is an indication of a potential sell. So if we'd bought the stock here, let's imagine we'll follow this price over here. The stock that day was about $7. If we'd got in the stock between $7 and $7.50, didn't go quite that high that day. Let's imagine we got into the stock for $7.75 during that day because we had followed our instincts and the indication to buy. Then we'd let the stock price ride up. And right here where we got an indication to sell, let's imagine we sold that stock for $9.50. That would have given us a $2.25 gain. Roughly a $2 gain, plus or minus. It's impossible to know exactly when changes are going to make. So if we even sold it that day and got out at $9, we would have made over $2 in profit. We would have done this in a period of the end of December to the 1st of May. That's a 4-month period. We would have made $2, over $2 on that exchange. That's over 30% on that trade. 30% in 4 months. We multiply that. There are 3 4-month periods in the year, so we multiply 30% times 3. That would give us a 90% annualized return. Nevertheless, 30% on the trade is some people's idea of a good trade. You get to decide what that is. We can be greedy and want more faster, but frankly, in the stock market, a 30% return is actually pretty good, especially in a 4-month period. So we'll move on to our next indicators. The other indicator that we'll look at is called the Bollinger Bands, where the top band is seen as what's known as the resistance line. In other words, the stock price probably won't go above that line. Now we see in this case right here, it has gone above the line. As we talked about before, the stock prices, based on Bollinger Band theory, would mean that the stock prices would stay between the 2 green bands 92.8% of the time. That's the statistical analysis or ramifications of 2 standard deviations from this mean. So we see that the stock prices have breached that resistance line, which is a very bullish movement. We recognize a very bullish function going on here. When we see the stock prices start to move away from the Bollinger Bands, we recognize now we're moving back more towards a stable or consistent market. Now we see here that there was a spike in volume that day. Something had happened, probably an announcement of some sort, which caused investors to get very bullish about that stock and start buying again, which overnight pushed the stock prices up. Now, you and I can't trade overnight, but the people on the other side of the world can trade overnight. So this is overnight trading, probably function of trading in the Japanese or the Chinese markets of this particular stock. Once again, we get the stock prices outside the Bollinger Bands. Very strong bullish indicator. Then it starts to back off and go kind of neutral for a while. We see that the red line is still above the green line, so we kind of be patient and hang in there. At this period of time, we see a big spike, another big spike of the stock prices going up. The black candle means uncertainty, in case you were wondering. So we have some additional uncertainty here. The stock prices start to come down. But notice that the red line is still above the green dotted line. So we're still bullish. We're going to be patient and hang in there. We follow the stock prices around and around. At this point, we see that the green line is now above the red line. That would indicate a bearish function. We'll look at some other indicators to explain why we don't bail out of this stock at this point in time. Follow the stock price along. It seems to be stuck in what we call a price channel. Then at this point in time, the red line takes a drastic turn to go below the green line. And that would be a sell signal, as we talked about, a potential sell signal. So, looking for additional indicators to confirm our thinking. The relative strength indicator, when this value is below 20, which it is on this line, this is the 20 line. This is bearish territory. When the indicator starts to go above the 20 line, we're in bullish territory. When we get above the 70 line, that is a sell signal. So this is a relative strength indicator. Next, we'll take a look at the MACD. On the MACD, the black line is once again the line that we're interested in. We kind of ignore the red line. Once again, it's a smoothing line, just like the stochastic. We're interested in the black line only on this particular part of the graph. When it's above the red line, we're in bullish territory. When it's below the red line, we're in bearish territory. We're looking for the crossover signals. So we see here there was a crossover of the black line going below the red line. In this area right here, I call that a snake dance. In other words, it's ambivalent. We're not sure where the stock price is going to go. Are we in bear territory or bull territory? We can confirm that by seeing the RSI is also in ambivalent territory. And indeed, our stock prices continue to be in a price channel. No indication of going up or down at that point. Then we can take a look at the MACD histogram. These little bars, these little blue bars, revolve around the zero line over here. This is 0. When the blue bars are below the 0 line, we're in bear territory. When the bars are above the 0 line, as in over here, we're in bullish territory. We can see there's been a lot of ambivalence right now. The bars are not very big, so not very strong movements in either direction. The longer the bar, the stronger the movement. So in this area, we have a pretty good bullish function. In this area, we have kind of a bearish function. And once again, the red and the black line intertwine, doing a snake dance, kind of ambivalent through here. We do have some crossovers back and forth, but it really doesn't give us a strong indicator either way as to buy or sell. So we like to take a look at these crossovers as confirmation of a stock price movement. All of these indicators are trailing indicators. In other words, they give us the indication after the fact. Usually 2 or 3 or 4 days after something has happened, these indicators are responding. We'll take a closer look at that here in a moment. Now, the only indicator that I'm aware of that gives you a future look is called the fast stochastic. Once again, the black line is the one that we're interested in. The red line is a smoothing line. We could say when the black line is above the red line, we're in bullish territory, and below the red line, we're in bearish territory. But we're mostly interested in the black line. When the value is above 80, we have a sell signal. When it's below 20, we have a buy signal in here. So how can we fold all of this together into something that makes more sense? What we can do is, looking at our stockcharts.com display, we can click on this little box up here called Inspect, put a check mark in there, and that gives us some crosshairs. Here's the crosshairs that will appear on stockcharts.com. So let's take a look at this. Back on December 12th, which is the date indicator for our crosshairs, we see that the stochastic is in a buy position. Has been for a few days. We weren't really sure about that because as we look at the candles, they were still coming down. We then take a look at the MACD, and it's been in a bullish position for a few days. As we look at the stock price, it's still coming down, so we didn't make a buy before this date. We look at the histogram. We're in a little bit of a bullish position here. Interestingly enough, we still have candles that are still coming down. That's counterintuitive, but we want to watch all the signals and combine them together to make a correct decision. Then we're looking at the RSI. Once again, the RSI value is below 30, so it's a buy position. On this particular date, we have a very low candle. The RSI says buy. The MACD says going to bullish. The fast stochastic says going to bullish, or this is a buy signal. We don't know what's going to happen after that day. But these 3 or 4 indicators all lining up tell us that we're in a very good position to buy. Now, you may have noticed that this candlestick is resting on the bottom Bollinger Band line. This is called the support line. Technically speaking, the stock prices should not go below that support line, although we've seen that it does, but that's rare. So we could make the decision to look at the crossovers. Crossover is over here. We haven't got a confirmation yet. If we wanted to be preemptive, we could actually make the buy here, being a little more aggressive. But if we want to be a little more conservative, we would see that we had buy signals here. Then we wait for the actual crossover of the moving averages here, and that may be the point where we make our buy. Of course, we'll get a little bit better price over here. The problem with being here is we don't have the confirmation that we're in a bullish function just yet from the candlesticks and from the moving averages. So a more conservative investor would wait for that crossover. Having gotten these buy signals, or votes if you will, over here, we wait for the confirmation. Now we see the stock prices are going up and up and up and up. And if we waited long enough, we would see that in this area here, we now have the stochastic, the fast stochastic in a sell position. It's above the 80 line. We've had kind of a snake dance here where we had previously a sell signal here where the histogram was also indicating bearish, potential for more bear. In this case, the RSI is almost at 70, which would be a little bit of a danger zone. But we do get this crossover right here telling us to sell. It came a little bit sooner than our other indicators, but within a reasonable time frame. We could have sold up here, or maybe we wait and sell over here. We get that bullish function once again here, but if we'd sold in this position on roughly April 8th, we would have made a profit. Looks like the stock prices on this day were around $6.50 or so. If we'd sold here, well, we get the crossover on the sell side would be about $9.50, $9.60, somewhere in there. Would have made a couple bucks, once again, in a few months period of time. If we missed that selling opportunity, we could write it out and sell again over here, or we could have sold here, bought it back here, when we get the signals all lining up again, and made a few more bucks in a very much shorter period of time, in about a month. We could have started out at $9 and sold at $10.15 roughly. Made a nice little profit there, about a 10% profit in 2 weeks. Not bad, especially for this kind of a conservative stock. So where are our buy signals? These are buy signals right through here. Where are some sell signals? Well, we get a pretty strong sell signal back through here, where the stochastic is high. We see that the MACD has gone bearish on us. This is still a little bit ambivalent, so we're not sure. We could have waited until this signal gets down to about 30, and that could have been a confirmation for us. Then our moving averages crossed over here. So any time in this area would have been a good time to sell. Even if we'd waited until this area, when the moving average had crossed over, we still would have made a nice little profit. As you can see, this is more of an art than it is a science. But if we can match up all these signals, we can do pretty well with our investing. So, that's basics number 3. How to look at your indicators for buy and sell signals. It's very exciting, I think. With a little bit of practice, we would suggest that you can become pretty intuitive about buying and selling. Is it perfect? No, it's not. Will you make mistakes? Probably. That's why we suggest that you probably do 50 to 100 practice trades. And most of the brokerage accounts that I know of have virtual accounts, or what's known as paper trading accounts, where you can make these virtual trades and get a lot of practice by looking at real stock prices, but in a virtual or pretend mode. We'll move on next to Basics 4, where we'll delve in more of the meanings of candlestick patterns, which is kind of interesting. The Japanese have created some very interesting names for patterns that give us an indication of what the candlesticks may tell us the stock price is going to do. In Basic 5, we'll be going over some additional overlays that could be used in addition to what we've already learned. The basics that we learned today are sufficient for a knowledgeable trade, but there's some additional indicators you may want to learn as well. Then Basic 6, we'll explore some of buy and sell strategies. That's a section that I added just this week, thinking that might be helpful to you as well. It gives us a little bit better idea on how to be more successful, take a little less risk. So more profit, less risk is always a good thing. As always, you can go to www.academyofti.org/free tools. You'll find this kind of thing, as well as other videos and instructions on how to invest in the stock market. And I think it's a great idea if you want to get a solid understanding of trading in the stock market, to buy the book Notes from a Profitable Investor. That can be found on Amazon.com, as well as a link in our website. It's been a pleasure being with you today. We'll look forward to seeing you in the next presentation.